Hey guys, good morning. Real quick, I'm going to go over a couple little things. There's so many stocks moving today, it's hard to keep up. Anything related to testing kits seems to be the new thing. I think there's some general market commentary that I wanted to get as well, but let's just really quick get into UVXY and the volatility index. I'm starting to get a feeling, I mentioned the last few days that bottoms are ugly, and I felt like we were putting in a short-term bottom. This reminds me of like the dot-com bubble, where you're going to start to see, just like in life, the strong survive and the weak perish. You're going to start seeing that in the stock market. We're starting to sift through, and this is going to squeeze out a lot of these companies that aren't making money that are public. There's so many out there, and in a market that's just pumped with liquidity and perma bull mode, all these companies seem to catch interest and they stay afloat. But now you're starting to see the quality get separated from the trash, and the trash is not going to survive in this type of market. Even looking at the FANG stocks, I prefer Amazon and Netflix over Facebook and Google. Both Facebook and Google charts, if you look at them, and I can show them, but I want to stay on UVXY here, they do not have the snapback that Amazon and Netflix had. We have a little bit of a change in market direction and psychology here. So keep that in mind. That could be something that lasts for a while, at least if you're trying to quantify risk here. Obviously, Facebook and Google generate revenue off of ads, and whereas obviously they have other sources of revenue as well, but predominantly. And then you have stuff like Facebook or Amazon and Netflix that are in the sweet spot in this market. So I'm going to get back to some general commentary and some stocks in my next video, but just want to get this out here. I think UVXY, I don't know, I got a feeling here that top was made, and you could see this thing come unwound badly. But I think the market, like I said, is still, if I look at the SPY chart, and I don't want to look at SPY now, I'm going to look at the S&P 500 index, because I think SPY just shot out a dividend, so it might skew it a little bit. But I do think you got to start, if you guys are long UVXY here, and we've talked about this, the trading ranges are going to start going sideways, I believe. So I think there is a risk of getting down into the upper 70s. And I think you're going to start seeing resistance right in these lines here, right in between 94 and 95, with maybe your top line starting to get up around the 104, 105, 106 area. I don't think you're gonna see this. Even if the market were to hit the lows that it just tested recently, you're not going to see this back up at 130 plus. So that's my take. I'd be selling volatility and the strength here. The market is like right on the teetering point of FOMO, where you're looking at these quality companies that are down 50, 60%. And if people start seeing these move up, they're going to jump on them and jump on them fast. And I'm seeing bad news come in this morning on the coronavirus, and it's not rattling the market. So it's all about psychology and where we're at when the news hits. So let's keep that in mind. And like I said, I'm a seller into this 94, 95. You might get a pump up to the 104, like I said, 105 area. I would not be long volatility here. It's been a sweet hold for a while, but I think it's time to start quantifying risk here and getting out.